Hey everyone, and welcome back to the channel. Today, we dive in deep into a question that every single real estate investor in the US has to face. Should you buy property under your own name or set up an LLC? This decision can have a huge impact on your profits, your protection, and even your peace of mind. So whether you're about to buy your first rental or you're a seasoned pro looking to optimize your portfolio, stick around. We're breaking down everything you need to know with no complicated legal jargon, I promise. Let's start with the most straightforward approach. Personal ownership. This is exactly what it sounds like. You, as an individual, buy a property, and the deed is in your name. John Smith owns 123 Main Street. It's simple, it's direct, and for many people, especially first-time homebuyers, it's the default option. So, what are the upsides? You find a house, you get a loan, you sign the papers, and you get the keys? This means fewer upfront legal and filing fees. You also get direct access to some of the best financing options out there. Lenders are very comfortable with conventional residential mortgages for individuals. This can be a huge advantage for maximizing your cash flow from day one. When you own a property, personally, the income and expenses flow directly onto your personal tax return through Schedule E. You can still deduct all the usual expenses like mortgage interest, property taxes, insurance, repairs, and depreciate. Plus, if you ever sell the property, you might qualify for the capital gains exclusion. If you've lived in the home as your primary residence for 2 of the last 5 years, but, and this is a huge but, personal ownership comes with a major downside. Unlimited personal liability. This is the big, scary monster in the room for real estate investors. If something goes wrong on your property, see, a tenant slips and falls, or there's a fire that spreads to a neighbor's house end, you get sued. All of your personal assets are potentially on the line. That means your personal bank account, your car, your other properties, even your primary home could be at risk. It's against you. While a good landlord insurance policy is your first line of defense, a lawsuit could exceed your policy limits, leaving you personally exposed. This lack of a protective barrier is the #1 reason investors start looking for alternatives. So, that brings us to the popular alternative. The limited liability company, or LLC. An LLC is a legal business structure that is legally separate from its owners, who are called members. Think of it like creating a protective box. You put your investment property inside this box. Now, if something happens related to that property, any legal or financial trouble is generally contained within that box. The #1 benefit of an LLC, and the reason most investors use them, is liability protection. This is what the limited liability part means. If that same tenant slips and falls and decides to sue, they are suing the LLC, not you personally. The lawsuit is limited to the assets owned by the LLC, which in this case would be the property itself and any cash in the LLC's bank account. Your personal home, your savings, your car, they are all shielded and kept separate. This separation is often called the corporate veil, especially as you start to acquire more properties and your net worth grows. When you own a property under an LLC, public records will show the LLC's name as the owner, not your personal name. This can be a strategic advantage. It adds a professional layer and can help you avoid unsolicited contact. From a management perspective, an LLC also makes your real estate investing look and feel more like a real business. Because it is, you'll have a separate bank account for the LLC. This bookkeeping separation is invaluable come tax time and helps you clearly see how your investment is performing. It forces you to be more organized and professional in your approach. First, there's the cost and complexity. Setting up an LLC involves filing articles of organization with the state and paying a filing fee. These fees vary by state from as little as $50 to several hundred. Many states also require an annual report and an annual fee to keep the LLC in good standing. For example, in California, you have to pay an $800 annual franchise tax, regardless of your profit or loss. These costs can add up. The second major hurdle is financing. Getting a mortgage for an LLC is different and often more difficult than getting one for yourself. Most lenders who offer those great 30-year fixed-rate residential loans will only lend to individuals. When you're buying in an LLC, you'll need to seek out a commercial loan. Commercial loans typically have higher interest rates, larger down payment requirements, often 25 to 30%, and shorter terms, meaning you'll need to refinance or pay off the loan in a much shorter period. This can significantly impact your cash flow and the overall return on your investment. Can I buy the property in my own name to get the good loan and then transfer it to an LLC? Most residential mortgages have what's called a due-on-sale clause. This clause gives the lender the right to demand the entire loan balance be paid immediately if you transfer the property as title without their permission. While some lenders might not enforce it, especially if you continue making payments, it is a risk. You're technically violating the terms of your loan agreement. Some federal laws offer an exception for transfers to an LLC you wholly own, but you absolutely must consult with a lawyer to navigate this correctly. Finally, what about taxes for an LLC? By default, a single-member LLC is a disregarded entity for tax purposes. This sounds fancy, but it just means the IRS ignores the LLC and all the income and expenses pass through to your personal tax return. You still file a Schedule E. So, from an income tax perspective, there's often no big difference for a simple rental property. You still get the same deductions for depreciation, interest, and expenses. However, you do lose out on that personal residence capital gains exclusion we talked about earlier. So, how do you decide what's right for you? It really comes down to a trade-off between protection and cost. If you're buying your very first property, you can get that fantastic FHA or conventional loan with a low down payment and take advantage of the simplicity. Just make sure you get a really good landlord insurance policy and maybe even an umbrella policy on top of that for extra liability coverage. However, as soon as you start thinking about building a portfolio with multiple rental properties, the scale starts to tip heavily in favor of an LLC. The more properties you own, the more tenants you have. At that point, the cost of setting up and maintaining an LLC is a small price to pay for the robust protection it offers your personal assets. You're no longer just a homeowner. Some investors even take it a step further and create a separate LLC for each individual property. This is called, if there's a lawsuit related to property A, it's contained within LLC A and doesn't affect the equity in property B. This offers the ultimate level of protection, but also multiplies your setup and annual maintenance costs. Ultimately, this decision is not one size fits all. It depends on your personal financial situation, your risk tolerance, and your long-term investing goals. My best advice is this. Use this video as your starting point, but before you sign on the dotted line, have a conversation with a qualified real estate attorney and a CPA in your state. They can analyze your specific circumstances and help you make the most informed decision, ensuring you're structured for success and security from the very beginning. It's an investment in professional advice that will pay for itself many times over. I hope this breakdown was helpful in clearing up the LLC versus personal ownership debate. It's a foundational concept for smart real estate investing in the US. If you got value from this video, please hit that like button. It really helps the channel out. And don't forget to subscribe for more practical real estate tips and strategies. If you have any questions, drop them in the comments below. I do my best to answer every single one. Thanks for watching, and I'll see you in the next video.